Hey, what's up, BK Stocks Academy? If you're new here, thanks for subscribing. Thanks for checking us out. We are a branch off of BK Trading Academy, where we typically trade Forex, but I decided to open this channel up on YouTube for those who may have followed us for Forex and looking to diversify their income with stocks and indices and ETFs. Even if you're new and never followed our Forex channel, I think this is beneficial for you. We're going to be starting from the basics of how to trade stocks, how to open an account, what are the differences in stocks, ETF, and indices from Forex, and then just building our way to advance, maybe start to trade and talk about certain strategies that help us to become profitable. So let's go ahead and dive into it. For you today, we're going to be looking at US30. We're going to also look at NAS100 as well. We're going to evaluate it, dissect it a little bit. And guys, if you're brand new, which you probably are because this is a brand new channel, I want you to hit that like button, subscribe if you haven't already, hit that notification bell so you can get information from me as soon as it drops. I'm really proud of this channel. I'm really proud of you guys for taking a step to want to diversify your money and even just wonder how to trade stocks and learn how to do that. A lot of people supplement their income from trading stocks and indices and ETFs. People who are retired, people who are Social Security, people who are just looking for extra income. Believe me, guys, this is my full-time job trading, and this is definitely beneficial if you take the time and learn. So that's what I'm here for. You guys are in for a treat. Let's get it. All right, guys, so here it is. So we're going to look at US30, we'll look at the NAS100, and maybe even the SPX, which is the S&P 500. So let's talk about what the NASDAQ is. So the NASDAQ is an American exchange that consists of a lot of companies, typically 100 companies, and most of them are technology companies. You have technology companies, you also have some health, transportation, media, and service. So a lot of different things like that. So instead of trading a stock by itself, for example, like here, this is the Microsoft stock here, we're trading $381 and some change per share for just Microsoft. I can come to the NAS100, which is the NASDAQ 100, and trade all 100 companies all at once in bite size, right? So this is the index, but if I want to trade the ETF, which is smaller amount, I can go to QQQ, and that is currently at $393 per share. So that can go a little bit deep, but like I said, we're a new YouTube channel. We're talking from the basics and we're starting to get to advanced. So if I'm talking a little bit in advance, I encourage you to watch the last few videos that I've uploaded, brand new YouTube, so you can start with just a few videos prior to this one here. And that being said, guys, I want you guys to go ahead and share this video as well. Like I said, we're growing, so I want you guys to share this video with people who are interested in learning about ETFs, indices, stocks, because I'm going to be providing some very, very vital information, especially for those who are beginners, and then we'll start to advance together. All right, so the NAS100 here is an index here. You can see where it's traded at. And so typically how you want to trade it is with the trend, in my opinion. I've been trading this for quite a while, and what I've discovered is that index or indices are pretty much the plural word for index, but indices typically trade really well with the trend. So what I mean by that is you'll see a trend going up like this, and every now and then you'll see a pullback. You'll see a trend going up, a pullback, a trend going up, a pullback. Now, the cons with indices that I've discovered is the pullbacks are pretty forceful. So this here, this here, this here, this pullback tends to be pretty forceful. And then the rise to the upside usually is gradual, right? So you can see here where I have an uptrend from the bottom, and then you'll see this pretty forceful pullback here, just temporarily, only maybe about a quarter the length of this initial push. And then you'll start to see it rise again. Now, this is the weekly chart. So typically indices rise in nature, especially US indices. So look what I mean by this. If I go on the weekly chart, I'm going to scroll out. I'm going to minimize my chart and just scroll out. Now, if I go all the way back into 2015 and even before that, you can see that price is rising in nature, right? You'll see this rise in price. Look at this aggressive pullback here. It only took maybe 2 or 3 months for that pullback to happen, but it took a lot of months for price to build. Look at these pullbacks here. So you typically want to trade with the trend. Now you can see that this deep fall here was back in June of 2022. This deep fall here was back in March of 2020 where there was pandemic. So typically it has to be something vital going on for something like that to happen. But ultimately indices, in my opinion, are really good to trade because of its nice trend. So buying is key, and you only want to buy when price comes down at a good price at support, for example, and we'll get into this later, and then you will buy at that particular point. So this is the NAS100. We're going to look at this and analyze this in just a moment. Now let's go ahead and look at the SPX, the S&P 500. Same thing. If I scroll out, go to the past, all the way to the conception of when this was traded, and I can go back even further. I'm all the way back into 1975, and you can see it flatlined and it's continuing to rise as the ages continue to rise. And look at this steep hill here. So it's safe to say that price will continue to rise. Now, you don't want to just buy just because you see that. Again, like I said, you want to buy when price is at a support zone. We'll get into that. All right, so that being said, let's look at the NAS100. We're going to analyze this together. One thing that I like to see and like to do is just trade supply and demand. That's it. Supply and demand is really good. Now, I already know that price is rising overall, ultimately, like I just showed you. Now, I like to look at my supply and demand levels, also my support and resistance level. What is supply and demand? Now, supply and demand is simply when consumers and producers are looking to make an exchange, okay? So just like you're at a grocery store, you're looking for your market to supply something to you at a good price, okay? And that's all it is. So pretty much what you will see is supply here at the top, and then you will see demand here at the bottom. All right. And so whenever you see price hitting a demand level like this, for example, you would like to buy. As you can see the candles start to rise and you would have been in profit. Now that price is here, it's pretty much at a supply level. Now you can sell, however, it's a lot more riskier. So I'm going to teach you the right way to start trading. Now you can sell indices, you can buy indices. However, like I showed you, we're all about reducing risks. So if you're trading something, you want to reduce risk. Now, if you know ultimately the behavior of price is rising, then you typically want to buy when price is at a discount. Here's your discount right here at demand. Now, if you are selling, you would like to sell at supply because price is high, and then you're selling just like the grocery market. They like to sell when price is high. However, the demand decreases, and so they need to drop that price and put it on sale. For example, let's say a carton of eggs. If it's too expensive, people aren't going to buy eggs. So they have to drop the price on sale. They say that, hey, this is a good price. Buyer says, you know what, I like it too, and they'll go ahead and buy. So that being said here, in general, I would like to wait for price to see exactly what's going to happen. I'm on the weekly chart. Now I'm going to go to the daily chart. I know that price is near my supply level here, and I want to see exactly what's going to happen. How high is price going to rise? Now, it's going to rise in nature. And so we may see something like this, price continuing to rise. It may continue to rise even higher and do something like this. And as I scroll out, it may eventually break this supply zone right here from the past. So I'm looking at the past right here to determine how high price may go. Now, because I know that the NAS100 rise in nature, I'm not just going to sell because it's here. It may continue to break like it has in the past. So what I will do is wait for price to start to stall, show wick rejection like it did here. And I'm just giving you an overall view of what to look for when you're trading. We're not going into too much specifics until later videos, but you want to see wick rejection or consolidation. And consolidation simply means when price is moving sideways. And when price is moving sideways like this, meaning not going up or not coming down, price is moving sideways. That means that buyers and sellers are in talks. They're trying to figure out what's a good price between the two. Now we can see that supplier said, hey, price is right here. And demand says, you know what? It's a little bit too high. Let's drive that price down, right? So sellers won. Now we're at a critical area here where price is right near our previous supply zone right here, okay? So price isn't quite there yet. And as price reached there, I want to see if it's going to consolidate like it did before. And if so, then I will determine that, hey, it may be a good time to sell, and it may do exactly what it did here. If it doesn't start to consolidate and it continues to push higher, and let's say it does something like this and goes even higher, then I know that my supply zone is going to break. It's going to continue that uptrend. And now I'm simply waiting for price to start to drop or consolidate like this, go sideways, and then drop. Once price drops, 9 times out of 10, price likes to come back to the previous high around this zone here, or maybe even this zone right here. It may come right back to this zone here, retest this, and this will be your new demand zone. All right, so hopefully this makes sense. So I'm going to write demand here. This is called a break and retest. in trading terminology. So as price hits the ceiling, our supply ceiling, it will break it. 9 times out of 10, it will come back down, retest. That's why it's called a break and retest. This is where I would buy. And as price gets to this area, I'm hoping that price will continue that uptrend because this here is on sale. So oftentimes the previous supply zone will become future demand zone. Let's do that one more time with the US30. All right, so the US30, same thing here. Price likes to rise. We can see in the past, price likes to rise. This particular index, there's usually major corrections here. So we can see back in September 2022, price came down, not quite testing this low, but very, very significant. All right, so we can see price continue to rise. And now we see that price is right here retesting this previous demand zone. Remember, price likes to come back, retest this zone again in the past, back in March of 2020. And now also again in April of 2022, we can see wick rejections. So let me go ahead and delete that so you can see a little bit clearer. Let's zoom in. All right, and so here's our wick rejection here. Again, it came right in this area and started to shoot down. So if you were selling, you would have sold right here at this supply zone. Now price is retesting the supply zone again, and you want to be careful because remember, indices like to grow in nature. However, looking at the candle behavior, we can see that we have a long-legged doji here. That's the name of this candle because that simply means that buyers and sellers are at a disagreement. So we have this long wick here, we have this long wick here, and price is right in between, and they're trying to figure out which way should they push it. Now, usually when you see something like that, you can almost count that price will start to drop and do something like that, just like it did before in the past. And it can take days or weeks to happen. I'm only on the weekly chart, so in this case, it could take weeks to happen, but the profits will be astronomical. So that's typically how you want to trade the indices. And one of the benefits of indices are that they're really volatile. I think that trading indices are really good. You have your trend direction typically, so you only really want to buy at demand and you want to sell at supply. However, the risks decrease significantly if you only buy at demand. We have the S&P 500. If I scroll all the way out, you can see how price is continuing to rise. And that is the nature of an index. I can do the same thing with Chipotle, for example. Let's go out to the weekly time frame and you can see how price is naturally just rising over time. All the way into the conception of Chipotle back in 2007, it rises in nature. So even with stocks, you want to find when price is on discount and only buy because the risk is very, very low. So guys, that concludes this video. We're going to go ahead and start to talk a little bit more about indices and ETFs and stocks, how to trade it a bit. But I want to give you guys the fundamentals first before we start deep diving into it. Guys, don't forget the thumbs up, share this video with other people. And I want you to drop in the comments, what are some indices, ETFs, or stocks that you want me to look at next time? And I will break it down for you in the next video or two, analyze it and tell you where I would actually trade it. So until next time, guys, you guys have a blessed day. See you in the next video.